Good evening, everyone, and welcome to a further update on Strix based on our interim results. I think we all agree the world seems a very different place versus 2019, but over the next 15 minutes or so, I would like to show you just how robust and resilient the Strix business is and how we're going to deliver on our commitments set out in the previous Capital Markets Day to double our revenues, primarily through organic growth within the next 5-year period. We have started with a very strong set of results for the half year, both against the COVID impacted 2020, but even more pleasing, I think, is the performance against 2019, particularly thanks to all of you working at home, all investing in new shiny kettles and appliances in your home. So thank you very much for your generosity. Once again, we have been extremely busy here at Strix with some excellent achievements year to date. I will leave the detailed financials for a future slide, but a strong performance with nearly 60% growth against the COVID hit 2020 and around 25% growth against the pre-pandemic year of 2019. As previously committed, we have now launched our new sustainability, a new sustainability strategy that is now available on our website. Really, the sort of headline being a commitment on the decarbonisation target for Scope 1 and 2 to be net zero by 2023 with minimal offsets, well ahead of the Paris Agreement and also well ahead of the majority of our peers across AIM. We've also been very active on our strategic initiatives since we last met. We have strengthened our resources to support our 5-year plans. We have completed a new factory in China to double our capacity, both on time and within budget during a pandemic. We've gained a further 1% global value share of the core kettle control market. We've continued to integrate Leica, our most recent acquisition, and we're going to launch more than 18 new products or updates through the course of this year. So very, very busy. So just to give you an update on where we are versus our 5-year plan to double the business. And I think in summary, we are making really good progress and we do remain very confident of all of our commitments. Revenue growth for the full year is on track to meet our commitment of doubling the business for the 5-year period. And we have maintained our guidance for the full year to be circa 30% increase in revenue for the year. We've actually grown 2% in our core kettle control business since we set our targets back in October of last year. So again, well ahead of our targets there. And we've set very ambitious goals for net zero and launched our ESG strategy, which you can find on our website, along with our diversity policy as well. And really, that's just the start. Now we're working very carefully on Scope 3, and we'll continue to update you on our progress. With our continued focus on efficiency and cost measures, coupled with our cash generation capability, which will return back to around 80% of EBITDA, having completed the factory, we remain fully committed to our progressive dividend policy linked to our underlying earnings, and we have now declared an interim dividend of 2.75 pence, a further increase on the prior year. Throughout the pandemic, we have continued to strengthen our management and skill sets to really support our growth plans, with a Chief Technical Officer being the latest recruit starting in November. She has extensive experience in the successful and timely implementation and commercialization of new products. One of the things I've been asked a lot over the last couple of weeks during our roadshows is about headwinds. And I think it's probably worth covering those off right at the beginning, because actually we are very much better placed than most in the current environment. Firstly, 90% of our suppliers are actually in China, supplying our China factory with minimal disruption. We have plenty of buffer stock from our Isle of Man factory that supplies China, and we can manufacture key parts in both locations. We are covered off regarding the electricity issues you're all hearing about in China, having installed solar panels across the whole of the new factory, and we also have backup generators that will allow us to run our factory as normal through any disruptions there. And then, of course, there's the old favourite that we've all forgotten, Brexit. This did actually hit us with the Aqua Optima business in the first half, but having now acquired Leica, we have a manufacturing capability and a warehouse in Europe to supply to Europe. So as from October, this is no longer a concern for our business. And then finally, commodities. Everyone is impacted at present, and as a market leader, we put a price increase in June to help offset those increased costs. We will review it again at the end of the year, but in an inflationary environment, we are able to pass such costs on to the OEMs. So let's have a quick look at the financial highlights. Sorry, my screen's a bit slower than I would like. So first of all, results. Whoops, excuse me. There we go. So results for the first half were positive, and revenue has increased by 57.6% with the addition of Leica. However, the organic growth results are equally positive at 28.5%, which was actually higher than the pre-pandemic level. Absolute gross profit was also impressive at a 48.6%, up again due to the addition of Leica, and also because we had very strong kettle sales. Organic growth was also strong at 26.8%. Looking at the adjusted EBITDA, that grew by 27.9%, and on an organic basis, we saw our EBITDA grow by 15.4%. Also with PBT, reported growth of 30.7% and an organic growth of just below 20%. On the net debt, we saw an increase of around 9.1 million. That really is because of the final payments for the factory and also the end of the Leica acquisition, and that brings us to a net debt to EBITDA ratio of around 1.1 times. We hope to get closer to the 1.0 times by the end of this year. I'm now going to move on to another question I get asked a lot about, which is the margin analysis. So I get a lot of questions on this, and clearly this is actually quite commercially sensitive for us. However, this slide attempts to break out the margin into blocks, taking into account all of the various headwinds. The 6 months gross profit margin saw an overall dilution of 2.3% to a very healthy 37.5% as we anticipated. And the primary factor is due to the full addition of Leica, which has a 2.8% dilution effect to the group's gross margin. Kettle control margin was flat despite all of the headwinds such as commodity costs and currency impacts, and this just further demonstrates this is a very robust and stable business model. Driving operational excellence is absolutely at the core of Strix, and during the pandemic, we experienced rising labour wage pressures, particularly in China, that offset part of those operational savings, giving us an improvement in margin of 0.2%. We continue to drive lean initiatives and automation to improve margins, and the increased capacity we've now got will provide additional opportunities for insourcing going forward. Our organic water and appliance segment have similar margins to the Leica structure because they are more sort of B2C in nature. Obviously, the higher growth of these lower margin categories will give us a natural dilution as we go forward, and we would anticipate this to be around 1% per year for the next couple of years as things balance out. The supply chain challenges that we faced in the first half resulted in a lower weighting of the organic water volume versus our kettle volume, which actually led to a slight improvement in the margin of that segment. And we will continue to expand the insourcing of water products to secure that supply chain and also to make sure we can earn incremental profits through vertical integration during that period. So we just move on to the factory. This actually will be the last time I present the status of the factory construction, and it is now fully completed, both on time and on budget. I think a really significant achievement by our team in China, despite all of the disruptions of the pandemic, just 14 months from start to finish to complete the factory. It provides twice the capacity of our previous lease premises, and yet it runs at the same or even slightly lower operating costs. Even during the move, we have implemented further insourcing for our water business to offset some of the supplier increases we've seen in the first half. Over 750 employees were transferred, and we have already achieved our full year target of having 73% of the assembly lines fully automated. And by the year end, we would expect the factory to have a utilization of about 65%. Needless to say, that additional capacity will allow us to maximize the economic benefits of lowering our costs, as well as strengthening our supply chain. And if you get time, there's two very nice videos on the website, one of the opening and one just showing a bit more detail of the factory itself, particularly some of the automation within the factory. So let me now move into the core categories, starting with kettles. The strong sales from 2020 continued into the first half of this year as restrictions from lockdown actually increased the average expenditure on home improvements and appliances with everybody working from home. This was particularly true in both what we call the regulated and less regulated markets, where the UK and Russia both saw double-digit growth. Strix is very well positioned to maximize these opportunities with a very wide footprint, and because of the scale of its products, particularly given the restrictions on traveling to and from China, which has certainly hampered any sort of brand interactions with the China copier suppliers. We have also seen very good product mix with a shift to the higher value controls within the regulated market, and higher end appliances, which actually also has improved our average selling price in that segment. Performance of the category throughout the pandemic, I think, has really demonstrated that this business is stable, robust, and highly profitable, driving exceptional free cash, with the majority of sales still cash in advance. Also, with only 40% of households owning an electric kettle, there is still plenty of opportunity to go for, and our focus really does remain on territories such as the USA, Russia, UK, China, and increasingly India, in fact, as the penetration gets closer to that magic tipping point of around 12%. From a development point of view, it really is business as usual for us, and we're always working on the next generations of controls with a focus on reducing costs, reducing the use of commodity materials, and improving automation. All of that whilst improving our specifications and to support our sustainability goals. These controls are precision components, many with more than 1,000 critical dimensions, and we are always challenging the boundaries, looking for new materials, new technologies, as well as working to improve switch-off times to reduce the in-use energy. Going forward, we'll be working on our next generation for launch in 2023, which will provide significant cost and specification benefits over the current range. These controls will also require very sophisticated automation that we have already installed, and will therefore make it much harder for our competitors to achieve the same cost benefits. Back in the Capital Markets Day, we estimated a CAGR growth of 3% and to increase our value share by 3% over a 5-year period. This year, not surprisingly, given the pandemic impact, we've actually grown 35% in the first half of the year, and we'll look to grow by around 8% for the full year, with a 2% gain in value share since October last year. So we are well on the way to achieve that goal, and obviously very confident in that particular growth target. So moving into the water category, we've also had a very strong start to the year here with a 98% growth, particularly with the full impact of Leica, which itself has shown growth rates well in excess of 20%. However, it also has been quite a challenging period for this category, particularly for our private label business, with many of the retail outlets closed for quite significant periods. This has also limited the ability to launch new products effectively during the first half. We've experienced issues with respect to Brexit for our Aqua Optima sales into Europe, as well as some strategic adverse pricing from suppliers as we clearly became more competitive globally. The overall growth rate of the market is estimated at around 10%, and as we move into the second half, we're going to see some quite positive changes for Strix. We can now start to insource several products within our new factory, which will provide security of supply as well as an improvement in margins. We secured the relevant approvals to launch a comprehensive range of products into both China and America, with several agreements already in place, albeit later than we would have liked, but actually already now for the back end of this year. We have a footprint in Europe following the acquisition of Leica, removing the challenges we have faced for the shipments into Europe due to Brexit. And as we ease out of the pandemic, we are seeing increased activity from in-store sales, which will certainly allow us to launch our range of new products far more effectively in the second half. In 2021, we saw a number of new products being launched into the market, which includes new tap filter program, new bottles and crafts using Leica's fast disc filter, as well as a patented device to make the Aqua Optima filter compatible with the new range of jugs from the market leader, maintaining our position as a universal filter solution. Of course, we can't forget Halo Pure. That continues to gain traction in China, with 7 contracts now signed up, and well on the way to securing our commitment of 10 systems this year. You will see a significant ramp up of new products during the next 2 years as we start to realize the opportunities from an extensive roadmap of new products, as well as an increase of focus on expanding our geographical footprint, particularly in USA, Europe, and China, where we have now secured several new contracts, as well as a new OEM in China to drive the Aqua Optima sales. Again, back in November last year, we set some very aggressive targets for growth in this area, with 5-year CAGR of 27%. We remain fully committed to this target and are making really good progress despite all of the disruptions we've seen from the pandemic. This year, we are well on track to secure this growth with a first half growth of 98%, including the impact of Leica, and a forecast of 100% for the full year, as we continue to drive those new products and realize the synergies between the various brands. The new products will form the next stage of our growth, opening up key markets and securing new contracts with the depth of products that we now have available. So now moving into the final category of appliances, Interestingly, the lockdowns actually prompted a spike in home appliance market, with GfK reporting a growth in kitchen appliances of more than 20%. And I'm pleased to report we are now really starting to get some traction on those new products. Back in the Capital Markets Day presentation, we had again set an aggressive CAGR of 25.5%. And once again, I'm pleased to report we remain totally committed to that target and are making very positive progress towards it despite all of that disruption. Hopefully by now you will have seen the launch of the Aurora product, which was launched on Amazon in June. A water dispenser you may be able to see behind me as well, providing chilled, true board filtered water, as well as any temperature in between. It provides convenience and flexibility for the consumer, and given its highly efficient heating and dispense systems, will significantly reduce the energy used, heating only the water you require and starting the dispense in less than 5 seconds. And that is with no preheating of water. Anybody who's interested, it's on offer on Amazon at the moment for £150, so great to get your early Christmas presents if you haven't thought of it already. Success has also been followed by the launch of an all-in-one beverage station from probably the largest global brand in the world using Strix technology. So that's really a good accolade of our technology, and clearly is going to help boost our volumes in the second half of this year. We also launched the Dual Flow, a kettle and a 1-cup in one device, which is now in mass production and is launching into North America. In addition, we've seen 3 new launches from Leica, incorporating a new fast disc filter, and we've also received our first order for an innovative sterilizer dry in our baby products category from one of the leading US brands. Again, we have numerous new products coming through for this category over the coming years, which includes a range of water dispensers, filtration devices, heating technologies, as well as some quite disruptive technologies. All of these demonstrate our increased focus on our innovative new product roadmap. And you've also seen we strengthened our team in this area, with Jada Gibson joining us as our Chief Technology Officer in November of this year. From a growth perspective, again, we set some ambitious goals, 25.5%. And as you can see, with a growth of nearly 900% in the first half of the year and a projection of 250% growth in the full year, we've pretty much nailed this target, both with the addition of Leica, but also with the work on our new products in 2020, really starting to gain some traction. Moving on to ESG, clearly a very important topic at the moment. We have now posted our strategy on our website, along with our commitments, and clearly, I believe we are significantly ahead of the Paris Agreement, and I would hope you would all agree it puts us really in best of class, certainly within our peer group. In addition, you'll also find our diversity strategy on our website, demonstrating how we create a working environment that really empowers our employees to thrive to their full potential. As a global employer spanning across multiple continents, we really do pride ourselves on our gender makeup of the workforce, where 60% of our employees are female and women have a 23% management representation. If you're looking forward, we will continue to push the frontiers of our strategy, and near-term projects will include a detailed analysis of our Scope 3 emissions and further work and actions across the value chain. I'll leave you all to examine all of the KPIs in detail with the strategy document on our website. I hope you'll agree this really does set out a very clear and ambitious commitment to our sustainability. And then finally, just in summary, we remain very confident of delivering 2021 full year results in line with the market expectations and executing on the medium-term strategy to double the group's revenues over the 5-year period, primarily through that organic growth in its water and appliance categories, as we set out in our Capital Markets Day. Strix is a very robust business that has delivered significant growth in adjusted PAT in the first half, both against the pandemic impacted 2020, but also against pre-pandemic 2019. We have a very solid, resilient and cash generative core business with quite a unique working capital cycle that benefits from both geographical and product diversification, providing a growth business that can support a progressive dividend with a very high level of free cash. We continue to execute efficiency measures and strategic initiatives to navigate headwinds, whilst continue to invest in our future compelling growth opportunities. I would be very disappointed if I could not find additional M&A within this period, and that would be incremental to our current reported targets. So we are just now 1 year into our 5-year growth plan, well on track and committed to delivering against our target. And here at Strix, on the Isle of Man, we are establishing what we believe a world-leading, innovative and sustainable technology business. And with that, I'll hand over to Roland for the questions.
Are you affected at all by semiconductor shortages?
Not really. The only area that we've seen some impact, and this is going back probably 9-10 months ago, was a few of the ICs we used in electronic kettles and on some of our more sophisticated appliances. Actually, we secured stock back then and actually were well covered, certainly into the middle of next year on any of those devices. And nearly all of those are dual sourced with different components if there were to be a shortage. So I think quite well protected.
Questions about boiling taps, hot water taps, and right to say they are something you already you're supplying. The growth potential for that market.
I mean, the hot water taps is a slightly different market to our own. It tends to be more of an installed product, obviously a much higher value, and a lot of those are actually installed in offices and sort of new builds rather than actually as a DIY system. Actually, we do supply some components to that market. It is still relatively small compared with kettles, particularly in the UK, but it's a market we watch very carefully. But I think when you look at some of the appliances, particularly, for instance, the Aurora appliance I mentioned, you will see that the natural evolution will be for some of these to become more DIY systems that can plumb in, therefore offering similar, if not more convenience, actually, because you can select more temperatures, you can select different cup sizes, and actually there's no preheating of the water or space under the sink. So something we're very focused on. We do see it as a growth market, but I think we're looking at it more as a small domestic appliance market at this point. Okay.
And a few questions around China, and I'll just kind of pick this one out, which kind of covers the theme. And it's saying, are you concerned about China's growing antipathy towards Hong Kong, Taiwan, and the West generally?
No, we're not. At this point in time, we're not. I mean, I think we've been in China now for more than 2 decades. We have really close links with the Beijing government and also our local government in Guangzhou. They've been really supportive of our business. They've supported us when we've taken IP actions, even against Chinese companies. So we've always had a very, very good position there. I do often get asked, should we look in other sort of territories? Today, China is 93% of the kettle market. It has been for the last decade or so. So nearly all of the kettles are made in China. So obviously it makes sense for us to be there. And obviously, we do work with OEMs in other territories outside of China as well.
Question, and someone says here, you seem to be quite far ahead of your 5-year plan so far. At what point do you have to rewrite the plan?
Oh gosh, first year of the 5-year plan was the pandemic. So yeah, I think too early to sort of count chickens just yet. We always knew the first year was going to be a good year. Obviously, we had the acquisition of Leica, which gave us a 20% growth from the start. So yeah, we are very confident in our 5-year plan. I think it's a couple of years before I would actually consider rewriting that, unless we did find some sort of strategic acquisition, for instance, which obviously would accelerate the plan significantly.
And acquisition is good. We can move on to that. Had a couple of people ask, what would you acquire? What would be the rationale for acquisition? To expand the product range or to grow market share, or both?
Yeah, we've been very specific to the market. We obviously generate a lot of cash in our business, which is obviously a nice position to be in. So we would be looking at a business probably in the order of sort of 30 to 40 million pounds, that is, and yeah, that we would cover from our free cash flow and from our own facility. We'd either be looking at some sort of technology bias, in some sort of small domestic environment perhaps, or we'd be looking at some different type of technology inside the sort of filtration part of the business, maybe the in-home type applications. Yeah, it is something we've been watching very carefully. We do have a target list, but you can never say when those sort of things would be available.
And we had a question about the dividend and the yield. I think you said it's 2.75p, the interim dividend. Is that right?
That's correct. It was a 6% increase. Yeah, obviously at the year end we will link it directly to our underlying earnings. So that was just an interim payment for the year so far. But we always do increase it by the full underlying earnings percentage.
The next questioner is asking about differentiation. Why customers buy from you rather than a competitor? Do you offer something that they don't? And do you see that changing in the next 10 years?
Yes, that's a really good question, and I don't really see it changing in the next 10 years. I mean, obviously, primarily the competition is around the kettle market. Most, in fact, all but one of our competitors are actually Chinese-based suppliers. with very different manufacturing techniques. We actually provide a tremendous number of services across the value chain, everything from designing kettles themselves to providing designs for heating elements. We work with 450 retailers around the world and 200 OEMs in China. We provide support to those China OEMs to sort of project manage and do root cause analysis. And in many cases, we even sell the OEM's kettle. So we are very well established across the whole of that value chain. And that's a very unique model for a business like ours. Certainly, I've been in the business now 15 years. We are continually moving the goalposts. As I say, our next generations of controls will need quite a sophisticated amount of automation, which we already have in our factory. And that will only make it more difficult for some of those competitors to follow us, particularly on a cost basis.